Well, I want to do just a very simple demonstration of how Fibonacci-based time ratios and price values can be used to make projections for high probability areas in both time and price to look for changes or corners in market trends. And here we have a weekly chart of Bitcoin. And we can see, just looking at this weekly chart, if we were to go back in time to the 2017 high and the 2018 low, this big drop in price, if we were to use these basic Fibonacci values, we can start by coming up with high probability areas for when we would expect the trend to change by using the data in this trend, the amount of time it took for this trend to exhaust, and how much, not value, but how much percentage change it has gone down in value to give us high probability areas to look for the next change. We could start by just starting at the swing high and drawing a simple trend line. And we're going to grab our Fibonacci based time zone tool, and we're going to start at the swing high. We're not going to go to the swing low. We're going to go to where the trend was exhausted, where buyers and sellers became equal down here, and demand began to outpace supply. However much time this is our downtrend. We see our next trend is a sideways accumulation trend, and then we have an uptrend. But I just want to point out that by using these Fibonacci based values, that it gave us very specific points in time where the trend could or would change. It doesn't always work like this. It is coupled with basic trading strategies where you use things for confirmation of trend change, like a break of the trend. Here's the downtrend. Price broke through. We take this amount of time as the chart is the final culmination of every person's buying and selling decisions. And we see it gave us, by taking the downtrend, it gave us the perfect exact end of our sideways accumulation phase trend and the exact end of our uptrend. And now I mentioned in the beginning that we can use these Fibonacci based values for both time and price projections. Well, how could we have projected a potential high price? We already have a potential time frame. Well, we can take this final culmination of all buying and selling in the last significant trend, taking the high and the low, and at what point they were actually exhausted and truly changed. And we can expand this range. My tool's upside down. But we can expand this range according to Fibonacci values. And now here is the high, here is the low. And if we drag this over, we will see that the next trend high was literally an expansion of 1.618 phi, the golden ratio, which is seen all over, and its inverse 0.618. And even the high of the sideways market respected the Fibonacci retracement value of 0.786. Now, this isn't the end be all of master price forecasting. These are tools that are used assuming that price in time will follow these natural laws that are laid out by the king. What has been shall be. There's nothing new under the sun. Whatsoever a man soweth, that shall he also reap. It's action, reaction, cause and effect. It is an expansion or a contraction of what exists already. Here is what exists already. Here's the final culmination of how much money people had, the decisions that they decided to make with them. And now this is a financial market, but we see the Fibonacci ratios expressed in everything from, we see it in snail shells to sunflower seeds or sunflowers. Just how things express themselves in space and time is always based according to Fibonacci-based ratios, and what they are is an expansion and a contraction of what it has to work with. Now we see these Fibs-based spiral shapes in galaxies, and just like we can use math to calculate the exact point of Jupiter 150 years from now, it will arrive in time and space exactly as it should, unless a greater opposing force comes along and changes the trend that it is following. Now these are financial markets that are subject to financial collapses, wars, different things. So by coupling these natural laws with basic trading strategies, by using trend lines and past known support and resistance values, we can come up with high probability zones that we can project out into the future based off of the past. And then we can look for the confirmation just using basic strategies of a trend. So the basic market cycle is a downtrend, a sideways accumulation phase, and an uptrend. Doesn't mean you'll get new all-time highs, but it will be an uptrend. And what we're looking for in financial markets is, here's our downtrend. Well, how high is what is going to be the high and the low of our sideways accumulation phase? Well, we have no idea. If we were to go back in time and we were to just very simply come back here, we would have no idea that I was going to use the replay, but it doesn't want to let me. We would have no idea that this is the high, but what would we have known? We could have got our Fib ratios of this price range from the swing high to the swing low. We could have said, okay, price has come up to a known Fibonacci retracement ratio. 78.6% of this trend was retraced or reclaimed that much of this price dump. And we could have used basic strategy and just drawn a simple trend line and said, okay, price has come up to a known fib level, just like it did here, but what did it not do down here? It did not break trend. Here we came up to a Fibonacci retracement value and we broke trend. So this is telling us that this is the high of our sideways market. Downtrend, sideways accumulation phase, uptrend. Downtrend, sideways accumulation phase, uptrend. We don't know the highs in the future lows, but we can say, okay, what will be the high of the sideways market? Well, it's going to be 9,975. It could be 13,650. It could have been 8,000. It could have been any of these fib-based retracement values. We have no idea how much fuel people have in the tank, but we know that it's going to come to a Fibonacci-based retracement ratio, and we know that it is out of fuel when it breaks trend. That is the confirmation. And then what could we have done here? We could have said, okay, now we know because we've broken trend that the high of the sideways market is in. Well, what is the low of the sideways market going to be? I mean, this is COVID. This is more of a black swan, one of those events, just like with Jupiter. We know where it will be in 50 years unless a comet hits it. But we could have drawn our trend line. We could have said, okay, well, we know that this is the high of the sideways market because it hit a Fibonacci based ratio. It broke trend. So now we can take this uptrend and we can find all the Fibonacci based retracement ratios of this uptrend. We can say, okay, well, let's put it on the low. Well, price is going to come down to one of these Fibonacci based retracement levels, and then it's going to break trend. You can see it came down to the 382 and it broke trend. Well, then we got COVID. And what happened with COVID? Price still came down and respected the golden ratio of 0.618. Well, the inverse, 0.618. Even COVID still stopped at a Fibonacci based time ratio. When would the sideways market end? Well, we squared this range with our Fibonacci time zone tool. Here's the downtrend, sideways trend. When did the sideways trend end? Well, right there. This is the exact week that this massive uptrend began. Well, how do we know what the high of this uptrend will be? Well, we took an expansion of our, well, here's our range right here, our swing high and our swing low. We're going to flip our tool over because now we're going upwards instead of downwards. And we're going to look at Fibonacci based expansion values, and it literally gave us our exact high. And when did it come? We have time, and half a time. It confirmed, and then our downtrend started. This gave us our exact high and exact low. With stunning accuracy. How did we know that this was the high, though? Well, there's two things that we can look at. We can look first at the trend. If we draw this trend line coming up, we can see that price broke it hit a known fib value and broke trend. And this is just a confirmation of the end of the bull run. We could have drawn a trend line right here and said, okay, at time, and half a time, price hit a known Fibonacci value. This is the golden pocket, the golden zone of 0.5 to 0.618 or 1.5, 1.618. Price broke trend and confirmed that this was the high. Price came down, it retested this high, it broke through by a few ticks. And then again we have this uptrend, again confirming that this was the high of the uptrend. And this is just a very simple way of using the Fibonacci based ratios of what exists already. I mean, this isn't like some weird pie in the sky. This is an expansion and a contraction of what exists already, what it has to work with, because there's just nothing new under the sun. And it is just the same things expressing themselves in the future. That is just an expansion and a contraction of what exists already. But like all other things, it is still subject to the natural laws of the game. And we find that even in the most chaotic systems, that there is perfect, decent order. Whether or not we understand it or not doesn't really matter. We observe it every day, and financial markets are no different. And while we can't say what the next high or what the next low will be, we can use just basic strategy coupled with these natural laws that many from times past would call the law of vibration. And we can say, okay, well, here's our last high. Let's draw our trend line. We can see price came down. Here it broke trend. It confirmed the break of trend. And then it started this uptrend. So we can now take this downtrend and we can say, okay, what has been shall be. And we can grab our Fibonacci based time zone, start at the swing high. We're not going to go to swing low, we're going to go to the break of trend. So here is our downtrend, our sideways accumulation phase, and our uptrend. What don't we know? We don't know what the high of this or what the low of this will be, and we don't know what the high of this will be. But what we can do is we can take what has been shall be, and we can look at Fibonacci based retracement ratios of our last macro downtrend, and we can say, okay, well, what is the high of the sideways market that we're currently in, this sideways accumulation phase where people are recovering from this insane downtrend from 69,000 all the way down to 15,000. I mean, that's like a 80% drop in value. 76%, which is, pretty close to a fib value, 78.6. And we can say, okay, well, we expect price to retrace this to one of our fib values, which is currently tapping about 50%. It's closing magically right at the 0.441. This may be the high of the sideways market. And how do we know that? Well, we use basic strategy by drawing a trend line across these lows. We say, okay, we know that price is about 50% of the way across this sideways zone that we expect to be our sideways market according to the Fibonacci based time, using this past trend time right here, and it's hitting a known fib value. Well, how do we know it's not going to go to this one or this one? We don't. But what we know is when it breaks trend and has hit one of these Fibonacci values, this is over. We can come up with areas that we should be looking for this break of trend to occur. And let's presume that this is the high of the sideways market. Well, what would be the low of the sideways market? Well, we would take this uptrend that is now formed, and let's take some Fibonacci based retracement values from the swing high to the swing low. And now we have to flip it over because we're going to the downside. We want to know how much of this trend is going to retrace. And we expect it to come down to one of these fib values, and probably about 80% of the time it's going to come down to the 0.5, 0.618 area, the golden zone. And as price is coming down, let's say this is the high. We don't know that yet because it hasn't broken trend. And let's say that it does this. And then what do we have here? It's going to form a new trend. We'll draw our trend line. We'll say, okay, the sideways market should end somewhere, approximately by April 8th of 2024. We're now downtrending, and price will break the trend, and then it will begin to uptrend. And when will the uptrend end? Most likely at time, and half a time. This is the actual end of the fib time zone. And how do we know what the high is? Well, we can make projections based off of this trend by just taking our Fibonacci tool and taking ratios of our past trend. Now that we're going to the upside, we'll have to flip it over. And we want to take our entire range here, swing high to swing low. We're going to say, okay, we don't know. We know this is our downtrend. We know this is our sideways accumulation range. And what we don't know is what the high will be. But we can project, if this was to expand, that it would expand to one of these known Fibonacci ratios of this price range. This is what it has to work with. This is what it has to expand. A population of 10 people can only expand by so much. It can't expand as much as a population of 3 people. You could compute the max amount of babies each couple could have. Even if they had, quintuplets. Just figure. There is a maximum amount. It can only go so far. And we can come up with these high projection areas of 145,000 to 173,000 if this expands. So here's our downtrend. Here's our sideways trend, will end around April 24th. And our uptrend, our high, should be in sometime between November, either at time and a half a time, November 18th of 2024 through June of 2025. And how do we know when the high is in? Well, here's our sideways accumulation phase. When we start our uptrend, just like we did over here, we're going to be able to draw a very simple, clear trend line. And when it hits the known Fibonacci expansion value, this one happened to magically hit the golden ratio, as many do. And we will know that it is over when it breaks trend. Now this could have broke trend back here. There could have been some macro war, could have been some financial collapse, could have been a solar flare that took out the internet or something. Just like Mars, if it gets hit by a comet, it's not going to arrive where it's supposed to because a greater opposing force has knocked it off course. In financial markets, how do we know that's occurred? Well, it'll break trend before it hits one of these values. And just to show that this isn't all kook pottery and that it only applies to Bitcoin, we're going to do one more for about 30 seconds. And we're going to open, this is Solana, which has far less liquidity and far less clout than Bitcoin does. Here is our uptrend right here. We can take our Fibonacci based time zones. We can say, okay, this is the trend bottom and this is the end of the trend. It's not the swing high, that's up here. This is when the trend ended. And oh, look at when the downtrend ended. Magically, right at the Fibonacci based time zone. And when would we expect the sideways market to end? Right here. And how far should we expect this downtrend to come? Well, let's take retracement ratios of this price zone. And now we're going down, so we need to flip the numbers over so they're going down. Oh, 0.618 to the dollar. You just can't make it up. The king is real. All things are decently in order. Even our decision-making processes, if you just zoom out far enough, all follow natural law. And now, this is the exact low that came in right at the magical golden ratio, right at the exact Fibonacci based time zone value on a completely different asset, and now we're in our sideways accumulation range. Here's our uptrend, our downtrend, our sideways accumulation phase, which should end by January 8th of 2024 for Solana. Now, what is the high of our sideways market? I have no idea. I really have no idea, but I mean, there is a trend forming. It's not a spectacular trend, but it is a trend. And we could take our swing low to our swing high. And now we're going up, so we need our Fibonacci expansion ratios going upward. And we would expect price to come to one of these known Fibonacci values, which it's tapping one right now. But is it breaking trend? No. So I mean, price is going to have to get up to one of these values here somewhere, or maybe it gets to this value and maybe it comes down and puts in, a double bottom of some kind. But we would know that this is the side. Here's our downtrend. This is the sideways accumulation trend. We would know that this is the high because it tapped this Fibonacci value literally almost to the dollar and then breaks trend. Or we could say this uptrend, when this uptrend breaks, this uptrend is hitting a perfect Fibonacci value. And we could just draw a very simple trend line and just say, okay, we know that this is the sideways market high when this trend breaks. It hit a Fibonacci value and then the trend breaks. And what will be the uptrend? When will the uptrend, the next bull run trend, begin? The week of January 8th, 2024. And what will be the projected area that we would be looking for? Well, we would take our downtrend, say, okay, well, we have broken trend, we've confirmed that trend break. We could take our Fibonacci time tool, we can move it over to our new trend, which here's the start of it at the high, here's the end of it right here. And we can expand this range just a little bit, and we can say, okay, this trend is done. We now have a new trend with new values, and we could say, well, our sideways market, here's 50% of it. Here's our trend that's forming. We could reevaluate this just a little bit using our new trend. Say, okay, well, when we hit this Fibonacci ratios and we have a break of trend, that is the end of the sideways market high. We could take that high, and we could take this low and figure out what the low would be. But what's going to be the next bull run high? Well, we could take this downtrend to the high. We can say, okay, well, when price breaks out to the upside, it is going to come to one of these known Fibonacci based ratios. Maybe it doesn't make a new all-time high. Maybe, it only makes it to the 7, maybe this is the high of the sideways market. And price comes back down here and breaks this trend and confirms this is the high. It puts in a low at, a Fibonacci based level down here. And then we get to the end of our Fibonacci based time zone. It breaks out to the upside and forms a new trend. And that new trend is going to end at one of these Fibonacci expansion values. It hopefully up here at 2,300, because going from $2,025 to $2,300 is a wonderful increase in price. It's, 5, 6,000, 7,000%. It happens in crypto land regularly. But we don't know that price is going to get up there. These are high probability areas where we are looking for the trend to change based on time, and half a time. This is December 2nd, the end of November, beginning of December 2024 to July of 2025. And this is just a simple example of how Fibonacci-based ratios in both time and price can be coupled with basic trading strategies, just using simple support levels and resistance levels and simple trend lines to give you high probability areas where there should be a change of trend, when it should occur, and at what values. And I hope it was a help and a blessing to you. And that'll be the end of our video.